Hey everyone, welcome back to DMMS Trading. If you're new here, make sure to hit that subscribe button and ring the bell for the latest stock market tips, investment strategies, and insights. Today, we've got an exciting question to explore. Can you turn $50,000 into significant wealth in 2025? How should you invest that money in the stock market to potentially grow it? Let's dive into it and find out. Alright, let's get into it. $50,000 is a great starting point. It's enough to make a meaningful impact on your financial future if invested wisely, but the stock market, in a get-rich-quick scheme, it requires strategy, patience, and risk management. So, how can you potentially turn this amount into something even bigger in 2025? On average, the stock market has provided about 7 to 10% returns per year over the long term, but some years are better than others. So, let's break down a few smart ways to invest that $50,000 for the best potential returns in 2025. Growth stocks riskier but high reward. If you're aiming for higher returns, growth stocks could be your best bet. These are companies that are expected to grow at an above-average rate compared to other companies. In 2025, industries like artificial intelligence, clean energy, and biotechnology are likely to see rapid growth. Of course, these stocks come with more risk, so you should only allocate a portion of your $50,000 here. Let's say you allocate 30%, about $15,000, into growth stocks. If one of these stocks performs really well, you could see big gains. But keep in mind, there will be volatility, and some stocks may not deliver the results you hope for. Dividend stocks, steady income and growth. Next up, dividend stocks. These are stable companies that pay regular dividends, which can be reinvested to compound your returns. Companies in sectors like utilities, consumer staples, or even tech giants are known for paying solid dividends. This is a safer, more stable approach, and it's perfect for long-term wealth building. With $50,000, you could allocate 30%, around $15,000, into dividend-paying stocks. These investments provide regular income and could grow over time as the companies increase their dividends. Plus, reinvesting those dividends gives you the chance to compound your returns. ETFs and index funds, low risk, broad exposure. For lower risk and a diversified portfolio, consider ETFs or index funds. These funds track the overall market or specific sectors, which means you're not putting all your eggs in one basket. This could be a safer option if you want to ride the market's long-term growth without worrying about picking individual stocks. You could allocate around 40%, about $20,000, into ETFs or index funds. This gives you broad market exposure, which tends to perform well over the long run. While your returns may not be as dramatic as individual stocks, it's a great way to minimize risk and benefit from overall market growth. Real estate investment trusts, REITs. If you're looking for a way to diversify further, you might want to look into real estate investment trusts, or REITs. These allow you to invest in real estate without having to buy property yourself. REITs often pay dividends and can provide a hedge against inflation. Show examples of popular REITs like Realty Income O or Vanguard Real Estate ETF VNQ. With $50,000, you could allocate 10 to 15%, around $5,000 to $7,500, into REITs. These can provide reliable income and help balance your overall portfolio. Now, let's talk about managing risk. The reality is, no investment is without risk. The stock market can be volatile, and some of the higher risk assets like growth stocks or crypto can swing dramatically. It's important to set realistic expectations. With $50,000, you should be prepared for ups and downs. The key is to stay disciplined, avoid panic selling, and understand your risk tolerance. Can you turn $50,000 into massive wealth in 2025? Absolutely. But it's important to set realistic goals. The stock market is a marathon, not a sprint. The returns from your growth stocks could vary. Your dividends will take time to compound, and your ETFs will follow market trends. But if you stay patient, diversify wisely, and invest for the long term, you could see your portfolio grow significantly. So, to recap, if you're looking to turn $50,000 into wealth in 2025, a diversified strategy is key. Mix growth stocks, dividend-paying stocks, ETFs, and possibly even REITs to balance risk and reward. Remember, there's no one-size-fits-all approach, and your personal goals and risk tolerance should guide your choices. Thanks for tuning in. If you found this video helpful, don't forget to give it a thumbs up and share your thoughts in the comments below. How would you invest $50,000 in 2025? What strategies are you considering? And as always, make sure to subscribe for more stock market insights. See you in the next video.